So in this video, I'm going to be talking through entry types for the intraday work. I'm going to be showing a new example, which follows on from the previous example we spoke about. And then I'm going to show you a bunch of screenshots as well of great entries. Now, in terms of entries, we will talk more about it in scaling in, and there are going to be lots and lots of examples in the extra studies section. Now, when you first watch this, there may not be loads of videos in there, but they are going to be added over time. Each week, each month, I'm going to put a bunch of new videos in on case studies and also backtesting work as well. And I'll talk through it, and some of them will be voiced over with music, just so you can sit, relax, and watch the process play out. But for this video, I'm going to introduce the basics of the intraday entries. I'm going to show you the risk entry kind of approach, the confirmation entry kind of approach. So what we're going to do is recap a new position following the top-down process, just to get that in your mind a bit more as well. And then we'll talk about the different ways to enter. Now, before we dig into that, I want to talk about the actual process of entering positions on an intraday basis. So let's have a look at a buy example. What we're looking for in a buy example is for the market to shift out of lower lows and lower highs and into a phase of higher highs and higher lows. Normally on an intraday basis, we are always going to be looking for confirmation entries. Now, the confirmation entries here are slightly different. We use structure confirmation, and because we're normally executing on the 1, 3, or 5 minute time frames, generally the 1, that means that we have to trust the structure of the new order flow. So that means rather than waiting for price to enter a demand zone and then looking for this structure that we get, we're already seeing that structure. So we are simply looking to put buy orders here and then buy orders here and then so on, following the buy orders up with the structure, okay? And that is generally the approach that we take. So rather than looking for this, we are simply looking for this overall structure to continue moving to the upside, and we use the zones that broke structure and we place orders on there. Now, this is generally when the market is already in the swing of moving in that direction. So generally, we're not going to get an entry straight out of the demand zone that we're targeting, but when the structure starts to shift up, we will then follow on with the trend and buy in as it moves up. Okay, so we're going to see that in action now, but on a sell side in this position that we're talking about. So starting from the top and breaking this trade down, then it follows on from the previous video. We had a lower low, lower high, lower low, and then what we were looking for was for price to pull into this supply zone here. So we've actually seen price come in and trade into the supply point now at the start of the next day. Now, we did say this would be the target for the buy trade. We probably would have closed it around this point at the close of New York. And then the price did continue in and trade into that supply area. So if we go down to the smaller time frames to watch price action now, what we'd be looking for is a shift over to then actually sell into it. So looking at the very low time frames, we can see here we have a higher high, higher low, equal high here, and now we are starting to sell off. So this could actually be the rollover. It was a very slightly higher high, so I'm not too worried about liquidity above this level. If we went and broke through here, we could then begin looking for short opportunities. If we push up, we'll just then simply have to wait for the next opportunity to come through. So at this point, we just broke the structure. We've pushed through this point and we've pushed through this point as well. And what this tells us is that the market could now be ready for a shift down. Now, for a position here, we would look towards the supply zone and sell. Now, straight away, like we just said, we are looking to follow the order flow and we're just looking for buy and sell limits. So now that the structure has actually shifted to the downside, we would safely put a short order on this point. Now, not all the time are these levels going to get traded into, but what we can do then is follow the order flow. And because it's quite a simple entry system, it's quite easy to do that even if the trade takes off without us. So just watching this, let's see, are we going to get a retest into that point? Well, it looks like we are not. Okay, we've had a sell-off. We formed this new supply region. Now we've had another sell-off once again. So we could delete this order for the meantime, and we can look to follow the structure, because what we've seen here is now a break of this structure point, which tells us that the market is ready to move down. And which is the zone that broke this structure point? Well, it's this area here. This is the last candle before the impulse. So we could look towards placing an order here. Now, in this opportunity, we would place a sell limit on. We could clear the high there, and then we could just run that down to whatever target we're looking at. And if this gets tagged in, very nice. If it doesn't, however, we can then just look for the next opportunity. So our previous order was not triggered in, but what we now have is a new zone that broke structure, which is this one here. So we can just look to place an order on here to follow this structure down. Now, we do have to keep in mind, we do have some imbalanced zones above. These still can remain valid, but for the meantime, our orders are going to be set on the zone that broke structure. So flowing with the structure, we can just put our next order on here and see how that plays out. Now we've been tagged in and an instant run to 1R. Generally, we are going to want to manage positions when we break new structure points. So at this point, I wouldn't be break even. And we essentially are only in risk at this point here. Okay, now this trade has been stopped out. We made a push towards the second zone. When a zone gets stopped out, I'm then going to be normally interested in extreme zones, right? Because it looks like we are pulling back, but we are now intact with the trend. If we consider as well, this point has now broken, we could be looking at a larger time frame push down. So if we look at the 5 minute, for example, we've had a sweep of this low, and now we are pulling back up, could trade towards this imbalanced extreme zone. So I'm not too worried about this one. I wouldn't be looking to execute from this. If we did react from this, sell off and make a new low, then we could look to sell into it. But if we're going to be using orders, we are only going to be looking towards the extreme zones now, something potentially like this. So right now, we do have a -1 or loss. The market is continuing to make that higher high action though. I do like as well how we can see very slow momentum to the upside here. Very likely that we get tagged in at the low of this range and then the market sells off very nicely. So we will see. And then we get a nice little tag in and the market sells off very nicely. So that's good to see. The secondary position here has worked out very nicely. So there we have a -1 or loss, but now we are running around a 1 to 4, 1 to 3 position. Let's have a quick look. 1 to 3.5 position. So in this example, we would have around 2.5 R locked in. So that is how we initially enter into a position here on the low time frames and how we actually manage to secure these nice positions. So if we let the market run a little bit more, I'll see what other positions present themselves. Now, obviously, as we say, we are looking for a new break of the low before we make any action. So right now, we'd just be sitting with a break even and allowing the market to do its thing. So we took a 1R loss there. Let's cut that off for now. Make note that we did take a 1R loss. And now we have an entry from the extreme, which is running very, very nicely from this zone. Now notice how the entry there is about 1 pip or half a pip under the actual zone. When we're selling, we need to do that because spreads can tag us out. So another big consideration for entries is make sure you don't get missed by spread. Make sure that you actually account for that very small leeway movement there. Just make sure you do get tagged in. Because when the market precisely taps the zone, in a real life scenario, we're not actually going to get tagged in there. This would work, but if we'd put the entry right on the zone there, we would have missed that, even though it tapped precisely because of broker spreads, okay? So what we'd be looking for now is just a simple breakdown. Let's see if that happens. Now, at this instance, there we go. We saw a breakdown. If we were looking at this live in the markets, we would have been able to take advantage of this very beautiful position here. First of all, we have this sell-off, which breaks through the lows. Then we see the market pull back towards this supply zone in the high here, towards this area. A little bit of a tricky one to work with. Most likely we'll be working with this small doji area, but clearing the highs as well. And then we saw a tap into that zone and a secondary sell-off. So what we would do for an entry here is we have our initial entry running. We don't take any action until we get a new lower low. So we have this high point here. We come in, we form this low, but we want to see this low before we take a second position. We see the area broken, the market pulls back. What we would do after the break is place an order here with stops above the high, and then we can look to run these down. Now, this is where we could go ahead and do the stop trailing system, which we'll talk about in management, and we spoke about in the high time frame basis, where when we scale into a position, we would move the stop loss from this trade to this point here, which is going to lock in around 1 to 3, 1 to 3.5 minimum profit if the trade reverses on us. So then allowing it to run down, once again, we see a new lower low form. We could go ahead and move stops to entry there. So now we have a break-even movement, and we could also move these stops, and we have a definite profitable position coming in as well. There we go. Another beautiful entry position. So see, we made this lower low, lower high. Then we have a breakdown, so we can use this supply zone here for another entry. And notice how what I showed you before, we're using the order flow and just placing sell limits with this bearish order flow. And then see if the market comes down. Okay, here we are. Now, in this instance, we did just about form a lower low, so it's possible you would have moved your stops to break even. Let's call it a tag out point on this one because we didn't say we did. So here we have been taken out of this position, and this position at this level here. So let's scale these up. We have a -1R loss on the final position. We have a plus 3.4 win on that second position. And on the first position, we have a 5.3R win. So we have 5.3 plus 3.4 minus 1. So that is 7.7R combined profit minus 1R that we took on that loss over here. That's going to be 6.7R profit for the day on a simple intraday move down. And if we look at that on a higher time frame basis, the 5 minute, the 10 minute, very simple processes that you saw play out there for a nice 6.7R profit. Now, if you're risking 1%, that's 6.7 in a day, essentially in a London session, right? That's started trading around 9 a.m., 9:30 a.m., finished by 12:30, so 3 hours where you can just relax with the charts on in the background, do whatever you're doing, work on something else, or just relax. You could even literally watch a show or watch TV, or educate yourself, potentially read a book. As long as you have your chart screen up and your alert set on the structure breaks, you can just watch this and run with it. It's really low stress work, and we just follow that flow. And as you can see, it's more high frequency than the high time frame trading, of course. It's also more high frequency than the Asia session trading as well, but it does provide some wonderful opportunities. And even though it's high frequency, it's not like eyeballs bleeding, stressing high frequency. It's just let the trade run and join it as it runs. So that is what I have for you in this video, the entry types video. That is how we do it. So as a quick recap then, we'll shoot back over to the examples. What we saw here was a shift in the trend from a supply zone. No initial entry was given. We did not come back to this point. But when we did come down, we could then just simply follow this flow over and over again. And if it pulls back, remember, we can focus on the extreme. And when the structure starts breaking down again, once again, we can follow the flow. So all we are looking for to take good trades on the intraday basis is, first of all, lower lows in a sell, and then we sell from the lower highs. So when we come into supply, we sell, make a new low. When we come into supply, we add. When we make a new low and come back into supply, we add again. And that is the process. It's very, very simple, as you just saw here. This was obviously not the neatest day of trading compared to some that you're going to see, but even then, on a bit of a choppier day like this, we managed to secure some very nice profits. Now, one other thing I just noticed as well, see how well this works with the Asia liquidity run? We had a push up, we formed that sweep there, then we came in, we didn't sweep the low, but we gave ourselves a nice entry position there, which we then scaled through to continue into some lower trading. And that is the entry process for low time frame trades, all right? Just simply wait for the structure to form, wait for the flow to be in action, and then sell into supply or buy into demand on the 1 minute time frame as the market goes. And I even showed you quite a lot of the management here, but we will talk more depth about that as well. So thank you for watching. Hope you've enjoyed, and I'll see you in the next video.